Hello traders and welcome to another video review. Today is Tuesday, February 10th, 2026. Let's take a look at the Forex economic calendar for today. So what do we have here on Tuesday? Retail sales monitor from the UK at the level of 2.3%, beating the expectations of 1.3%. Australian business confidence up from 2 to the level of 3. Building approvals down from 15.2% to minus 14.9%. Non-event London session, however, US session looks much more eventful. Employment cost index, price index, export price index, import price index, core retail sales data and retail sales data, all of this is scheduled for release at 2:30. Business inventories and retail inventories excluding autos are scheduled for release at 4 o'clock. German Buba Balz will give a speech at 5 o'clock. 30 minutes later we got Atlanta Fed GDP now, and at the 6 p.m. we got short-term energy outlook. 3-year note auction 7 o'clock, and 10:30 API weekly crude oil stock data release. So quite busy US session, non-event London session. So without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar on 30 minutes looks very non-event. Consolidation, sideways trend around 1.1902, but on the 4-hour time frame chart you can see very clearly that we are moving higher. So how much actually did we retrace? Let's take a look. Let's take a look how much did we retrace. It might be quite interesting to see. Okay, so that's the high, that's the low. Let me just move it here. So we retraced exactly 50%, right? So we retraced 50% of this movement to the downside. 1.1924 is the high. As you can see, as I said, on 30-minute chart, this market is consolidating into the extremely overbought market conditions. So any breakout below 1.1897 is bearish basically, and we can see movement to the downside accelerating. 61% Fibonacci retracement is located at 1.1962, and any breakout above this level is bullish. So the bearish situation here might be very briefly invalidated basically, right? So bearish outlook for the euro dollar, as it has a problem with the 50% Fibonacci retracement. Now cable completed the corrective structure. Now we have A, B, C to the upside. Not quite good for the bulls, because it should be some sort of the impulsive development. So right now we have only 3 waves. 1.30 to 22 is the technical support right now. Any breakout below this level is bearish. The movement to the upside above the above the trend line is bullish. Local high 1.3699, but we need to continue higher, especially with this kind of a momentum. We need to continue higher. We need to continue to move towards the wave X high. Let me just move this wave X high towards the level that it is actually the price extreme, 1.3732. And the breakout above this level is confirmation that this progression here, this development might be bullish, right? So for now, the most important level here is 1.3221 for bears, because any breakout below, for bulls, sorry, because any breakout below is bearish, and for the bears, the most important level here is 1.3734, because any breakout above it is bullish. So that's the situation on the British pound. US dollar versus the Japanese yen, clear rejection, clear movement to the downside back below the 155.57 technical support. Next level 154.44. With this kind of a momentum, there is a room to the downside here on the price chart. There is a room to the downside here on the RSI chart. So it looks like the market might be moving lower, might be moving inside the negative territory yet again. If we extend this trend line here, you can see that maybe this has been touched. This trend line has been touched here. Nevertheless, any breakout below this trend line is bearish as well. Gold. The gold market, as you can see, keeps moving higher in wave B, keeps creating the wave B of the correction. it still looks like the movement inside of this wave B has not been completed. Nevertheless, there is no clear evidence that the market wants to go lower, because no such a thing as this candle is being presented here. For example, this is of course a hammer, a candlestick made in the right place, and since then we've moved higher. So there is no shooting star, no bearish engulfing, no piercing pattern, no doji, no something like this is needed to for the traders to see that the wave B high is already in place. So right now the situation is like the development of the wave B is still in progress. Let me just update the levels, and we will move this level here. 5091 is the technical resistance. Possibly this might be the high for the wave B. However, it looks like maybe this market wants to continue to develop this situation here. S&P 500 basically doing not much. Momentum is barely positive, 59 points. Okay, 60 points is positive, let's say, but the market keeps trading inside of this trading range between 7,000 and 11, the swing high, and the lows roughly around the 6,700, right? So we go down, we go up, we go down, we go up. So oscillating trade here inside of this range. No breakout to the outside, no breakout to the downside. Quite nice reversal here from the lows of 6,720. We will see what the market will do later on. And the Bitcoin, as you can see here, the Bitcoin is reversing lower. So after the inability to break above the $70,000, right, the market is reversing lower, which is not good for the bulls, because it is showing the basically the inability of the bulls to sustain the more than 20% movement to the upside. So right now this is the technical resistance, 62,190. It is consolidating a little bit inside this area, roughly around 68,000, but any breakout lower will be bearish, especially if we're looking at the RSI. The RSI is unable to break above the level of 50 and sustain the breakout. The bulls are unable to break above the 72,000 level, and they cannot even test the 75,000 technical resistance, right? So this looks like another leg to the downside is cooking on the Bitcoin chart, and it might be made by the end of the week. So please keep an eye on the current situation on the Bitcoin. It is very, very interesting, and it looks like this movement to the downside has not been completed just yet. Okay, we got nice movement here, nice correction, nice pullback. Nevertheless, it's still not enough for the Bitcoin bulls. That is absolutely not enough for the Bitcoin bulls to sustain this bullish movement to the upside. They need to show something more than this, especially in terms of the momentum. Momentum is pathetic. It's still negative. Bears are in charge of the market, so any breakout below 68,000 is again bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.